So here is your June 2021 update for the best savings accounts. In a minute, I'll take you through the ones which pay the highest interest so you can earn as much money as possible on your savings. But very quickly, I'll give you through a couple of the updates that have happened since the last video a month ago. The main ones to tell you about comes back to the inflation rate. It changes every month. It's a roller coaster. It's up, it's down, it's up, it's down. But as I tell you in all of these videos, it is really, really important that if you can, you try and get a savings account with an interest rate that pays higher than the current rate of inflation. Now that's been tough most months over the last year with the pandemic really sort of pushing things up and down, really making it quite unpredictable. Well, suddenly it shot up. It doubled from the previous rate of 0.7% last month to 1.5%. That's the highest we've seen the inflation rate for a long, long time. Now, there's no guarantee that it is going to carry on there. It might drop back down. It could get higher. It's really, really unpredictable right now, but it is 1.5%. And that means, as we'll show when I run through the accounts in a minute, there are very, 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 very few accounts which actually do beat that money. So again, it's not a kind of like, well, there's no point because I can't beat the inflation rate. At least try your best. At least be aiming to get the best possible rate you can. It's still really, really important. If your interest rate right now on your savings is really, really, really low. I've done a whole other video, which hopefully you've already seen, but if not, you can check it out, where I kind of show you the difference between an additional 0.1%, 0.5%, 1%, 2% can actually make to your savings. If you're already on it, got your money in an account, which is all right, it might not be the best buy, but it's kind of not far off. It might not be worth moving your money now. But if you are, like the vast majority of people and the vast majority of money, languishing in an account that pays a pitiful amount, if anything at all, then really, really, really try to get a better rate of interest, particularly so with inflation so high, it's really, really eroding the value of those savings if you're earning nothing at all. Now, one of the positive impacts of that rising inflation rates, and again, we don't know whether it's going to be sustained, whether it will drop back down or when it will be kind of more consistent, although the Bank of England does have a target of 2% for that, and they're saying this could well exceed that by the end of this year. Okay, can't say for certain. But one of the kind of results, one of the things we're seeing because of this is a gradual increase in some of the interest rates being offered by some of the banks. Now, I mentioned we saw a little bit of that last month, and that's continued over the last sort of few weeks as well, to the extent now where the best easy access account and the best fixes, 1 year fix, 2 year fixes, things like that, best notice accounts are all gradually creeping up a little bit. But the ones which, as we'll get to in a bit, the market leading ones, the highest rates, which do have their restrictions on how much you can save in them, they haven't gone up. They are still pretty much where they are. So really, these increases, although they're welcomed, I really love to see them. It is fantastic. They're not necessarily going to have a huge impact on you right now if you're actually taking advantage of those other accounts which are actually paying a decent amount above those ones anyway. But we will get through to that in a minute. And the only other thing to mention, I didn't mean to mention it a month ago, but if you do have a savings account with CHIP, the AI savings algorithm, and this isn't the CHIP Plus One, which we'll talk about in a minute, which is a separate thing. If you've had a savings account with them from the beginning and you wouldn't have been earning much interest in that and you probably haven't been using it, but basically what they're doing is they're closing those all down because they're offering alternatives which are fully regulated and have full financial services compensation scheme protection, which is a good thing. The CHIP Plus One account already has that FSCS protection, so that's fantastic. It's just worth knowing that if you have one of these accounts, there is a chance that if you've got any money in there, you might need to do something with that before August. So just open up your CHIP app and just check if you've got any money sitting in a separate savings account. But you should have been emailed about this, so I wouldn't worry about it too much. Right, let's do the quick rundown then. I'm not going to spend a huge amount on it this month because it's not too dissimilar to last month. But if this is the first one you're watching, I'll give you an indication of where to go. Before we get into that, I do very quickly want to say rates will and can change at a moment's notice. So I'll tell you these ones now. It might be different, so do head over to the blog, becleverwithyourcash.com. I'll link to it below. And that's where whenever I don't necessarily update it every day, sometimes every day, sometimes every other day, but that's where you'll be able to see if a new account has come in with a better rate, replacing some of the ones I've spoken about right now. And of course, loads more information. Let's start off then with the highest paying ones, the highest amount of interest you possibly can get, and it is with a regular saver, the same regular savers as last month, the NatWest Digital Saver and the RBS Digital Saver. You have to have a current account with them in order to get this account. It pays 3.04%. The most you can save every single month is 50 quid, and you only can earn interest on up to £1,000 saved in there. So once you've done, 20 lots of 50 quid, 20 months of 50 quid, any more above that, you won't earn any interest on it. But if you've got a NatWest or RBS account, you may as well get one of these. You can, as I've mentioned before, have both NatWest and RBS accounts, so have 2 lots of these and be putting 100 quid away every month. Might be tempting to look at that. And the RBS and NatWest current accounts, the reward current accounts, will also earn you, I think it's £36 a year, as long as you have a few direct debits coming out of there. So again, might be worth checking that out if you fancy it, but I wouldn't go out of your way to get what will be, a total, 30 quid or something, but it's definitely worth considering it. Other regular savers, same as last time. Coventry Building Society 1.05%, that is open to everyone. And the other leading banks, you're looking at 1%. Different values of money you can put into them, different rules and restrictions as in when you can and can't take out money. Also, a quick note, someone has said, left me a comment on the blog the other day asking about why I don't mention some of the regional building societies. And that's because they are regional, they are limited to smaller numbers. And I try and do the stuff which anyone can get access to. But it is very, very well worth you checking out just your local building society. So wherever you live, find out if there is a building society which has a rate just for people living in your area. And that might be restricted by the postcodes, so only one starting with whatever can get this account, or it might be you can only open it by going into a branch. But you might find there is a higher rate available to you, so it's well worth checking that out. Now, the next level down in terms of the highest interest rates available to you are still the Virgin Money M Plus current account and the Nationwide Flex Direct current account. You will get 2.02% on the first £1,000 in Virgin Money M Plus account. You can have as many of these as Virgin will give you. There's no guarantee that they'll keep giving them to you, but I've heard from people who have got 7, 8, 9, 10, 11, 12, 13, 14 of them. So you could keep opening these, get 2.02% on however many of them times £1,000. It is a variable rate though, so that rate could drop at any time. So you might go through all of that. It doesn't take long to apply for it. I did it. I applied for a second one, did it on my app. Virgin Money app, took no time at all, accepted. So it's not a huge challenge to do this, but bear in mind you might go through all that, and if they drop the rates, you're suddenly left with all these accounts, which you can close down. But again, it might feel it's a bit of a faff. I would prioritize opening reward current accounts, which will pay you more money, even though it's not interest. If you're looking at, do I have more accounts for different sorts? Prioritize that instead. Nationwide Flex Direct, that only have one of those. You only open it once for the first 12 months. If you already had a welcome offer from Nationwide Flex Direct, you won't be able to get it again. That is 2% on the first £1,500 you have saved in there. Nationwide is a great ethical building society, so really worth considering it for your banking in that sense, although I'm not a huge fan of the app. That's your current accounts. Let's move on to Chip Plus One. As I mentioned before, this is app-based one. Again, I've got a video that you really need to watch and a review that you should read before you open it up, because it does not work like a normal savings account. But you can get 1.25% interest on the first £2,000 you have saved in there. If you want to save above £2,000, a fee comes into play, and that kind of does make a difference then how much you want to save in there before it becomes worthwhile again. But let's say you had a total of 10k in there, which is the max you can get the 1.25% interest on. That fee knocks it down to just over 1%, 1.06%. So it's still better than you're going to get in most other places, but you have to be careful between £2,000 and sort of £3,500, £4,000 as well. It's a bit muddy there whether it's worth doing it or not. Again, do check out all the further information before you open that. The alternative for larger sums of cash is paying me premium bonds. Now, there's no guarantee you'll get any money from this. I've got a whole video and article looking at how these work. But basically, the expected rate of luck, let's say you had £10,000 and you put it in premium bonds rather than Chip Plus One. The amount of money you'd get from Chip Plus One would be just over 100 quid. Guaranteed you would get that money over a year from the interest. In premium bonds, average rate of luck says 75 quid. Could get less, could get more. It's whether you want to basically have a bit of a gamble for that sort of 25, 30 quid extra you could get via Chip Plus One and see maybe you will win big. It's absolutely your call, but they're both easy access and easy to get your money out of. And with premium bonds, you can have up to 50k saved in them. They're the accounts that I would definitely look at. They're the ones which I think are good places for your money and you're going to get a decent rate of interest. When we go below this, again, maybe if you've got a lot of cash that you need available to you, they're worth considering. You want to guarantee you get some money. But again, the still rates aren't great, even though they are creeping up. So they're ones to keep an eye on. Let's talk first of all about fixed savings accounts. The top one here for 1 year fix is 0.86% with Zopa. This video just a month ago, it was 0.7%, I think, something like that. So we've already seen quite a big increase just over the last 4 weeks. There was even a deal a few days ago, 0.9%. So imagine this is going to start creeping up again, these 1 year fixes. The question you've got to ask yourself here is, do you want to lock yourself in when interest rates could be going up? Because you might find you miss out longer term, particularly if you're talking about 2 years or 3 year fixes. But 1 year, you might feel that's fine. You're guaranteed, you know what you're going to get. Personally, I'd rather I don't think it's worth it at these rates, but that's up to you completely. The next level below this are notice accounts. This is where you have a rate which is variable. It's not necessarily guaranteed, but if the rate does change, you can get your money out. But otherwise, if it does stay the same, you have to give a certain amount of notice to get it out. It could be 60 days, 90 days, 120 days, whatever it is. But in return for that, you should get a slightly higher rate of interest than you would do in the easy access accounts. The best ones there, you're looking at about 0.7%, 0.6%. Again, these do change quite a lot. For example, Charter Savings for 120 days, 0.67%. But 95 days, it drops down to 0.65%. Again, if they're ones that you want to look at and you know you don't need your money for 3 months or 4 months, then maybe it's worth considering. But I do think you probably beat it in those other accounts we mentioned before, particularly because notice accounts aren't locked in. Now, the other big change is with the easy access savings accounts, which we've seen sort of fall over the last year. So the 0.4% was the best you could get just 2 months ago. Well, a month ago, it had gone up to 0.45%, and now it's up to 0.5% with Atom Bank. You can save anything there. You could put just a penny in there if you wanted. So you can sort of start off. You don't need to have lots of cash, which sometimes these accounts do. What I would say is the difference between if you've got, let's say you've got a Marcus of 0.4%, difference between having 5 grand in account paying 0.4% and account paying 0.5% is £5 over a year. So it's whether you want to keep applying for news accounts and change them if we see rates increasing. But the larger that gap is between what you've got, as I said at the top, and what is being offered, obviously the bigger the interest difference you will receive. And potentially as well, it could be something that's kind of worth considering if you have larger sums of money, because obviously that's going to also mean a larger amount of money that you make. But again, do bear that in mind. If you're already on a decent easy access account, it might not be worth the admin and the faff just to swap for an extra 0.1%, but it's definitely worth keeping an eye on this because we're going to hopefully see this continue to increase. Kids Savers, exactly the same as last time. No big changes there, but it's great if you've got some money for your kids, some different options there of where you can put the money. It's also worth having a look at some of those regional building societies as well in case they have any special offers on junior ISAs. And finally, ethical bank accounts. Again, no real change here. I mentioned already the Nationwide current account. There's really good places for your banking and your savings. So that's well worth considering. They also have that start to save, regular saver, only £100 can go in every month, but you're getting 1% and you enter into a prize draw. The Ecology Building Society as well still has a 0.8% regular saver, and that is where your money is going positively proactively to funding things which are good for the environment. So that might be one to think about. And Tandem Bank still has a 0.4% green ISA. Still no news just yet about the government green bond. As soon as I hear about that, I will let you know. Fingers crossed, maybe in the update next month, I'll be able to tell you all about it. And if you want to make sure you don't miss out on those updates, I also do the same things for credit cards and current accounts and all the other videos I do in between those. Make sure you hit that subscribe button and that notification bell. And if this video is useful, if you think you're going to make some money on your savings from having watched this, please leave me a comment below. Let me know what you're going to do. My name is Andy Webb. Thank you so much for watching. Until next time, cheers. And here are a couple more videos you might find interesting.